Recording has started.
Will you be muting them?
Can you mute your mic, please? Okay. Good morning, ladies and gentlemen, once more. Welcome to our first webinar organized by the Committee on Migration, Refugees and Displaced Persons of the Parliamentary Assembly of the Council of Europe, and in particular its subcommittee on diasporas and integration and the Parliamentary Network on Diaspora Policies. This webinar is live broadcasted on the Facebook page of the Parliamentary Network on Diaspora Policies. It is also registered and will be available as a recording. I'll give the floor right away to our Secretariat to give our brief introduction into technical matters. Yes, can we have Mr. Mark Nebu on the floor, please? Mark, the floor is yours.
Thank you very much, and thank you all for having joined this webinar on behalf of the Secretariat of the Migration Committee. So the first thing just to remind you of is that this is only in English, so we do not have any interpretation for this event. If you have any technical questions, the Secretariat is available to you. They will help with any of the technical matters, or if you wish to take the floor, and I'll explain to you how that can happen. We're going to be communicating throughout this via chat, which is on your screen on the right-hand side. You'll find the chat button. It is very important that all of you keep your microphones muted, so please remember to do this. There is an option for the Secretariat to also mute you if necessary, but it's much better if you can mute yourselves. So, for technical questions, first of all, you can use the chat, the direct message in the chat box. So if you click on that, you'll have two options. One is direct messages, and that is the one you will need if you have technical questions. If you want to take the floor, what you need to do is you need to go on chat. Recording is on. And you need to go on everyone's chat box, which is one of the options there. Simply put your name, and then afterwards put floor request, and the message will get to the moderator, and you'll be given the floor at the appropriate time. So once you're given the floor, your name will be announced by the moderator, and then you'll have to turn your microphone on and also your camera on, or video icon on, so that we can see you. So once you're then on the screen, you can start talking, and off you go. At the end, if you're still on the screen, but are no longer speaking, please could you put your microphone on off. The same at any stage when you're not speaking, please make sure your microphone is off. If you're going to speak a second time, we'll follow the same procedure as well. So those are the messages from the Secretariat. We wish you a good webinar. Thank you very much. Back to you, Mr. Munyama.
Thank you very much, Mark, for the introduction and also for making us understand how the whole process will occur. I'm pleased to be the moderator today as the chair of the subcommittee of the Parliamentary Assembly in the Migration Committee and the subcommittee on diaspora. We have to remember that remittances sent by migrants to their families represent a vitally, we could say, important source of income for households to survive in countries of origin. Last year, in 57 countries, remittances actually exceeded 5% of GDP. Economic recession actually provoked by the COVID-19 pandemic and the lockdown that occurred strongly affected millions of migrants who lost their jobs, had limited access actually to health care, and many of them, we could say, were blocked in host countries. The situation had an important impact on global remittances, which by different prognosis may decline by about 20 to 30% in 2020. This decrease actually affects the lives of the poorest populations in the countries of origin. Therefore, at the beginning of the pandemic on the 3rd of April 2020, as chair of the subcommittee on diasporas and the integration of the Parliamentary Assembly of the Council of Europe, I made a statement urging the governments to make it easier for migrants and diasporas actually to send money home during the crisis. To my mind, it was very important that governments facilitate formal remittances via diasporas to their countries of origin during the crisis by lowering transfer fees and ensuring the security of operations and collecting all such funds in the local currency for onward transfer, thus ensuring safer and better controlled transfers. Today's webinar is actually organized to push this idea forward, and therefore we have invited a number of eminent experts to discuss how to increase the attractiveness of formal remittances, which significantly contribute to the gross domestic product of some countries and, of course, help reduce government borrowing costs, of course, costs of international debt. Before introducing the experts, I would like to reiterate some technical issues for the webinar that the Secretary has announced via Mark at the outset. First of all, please make sure that your microphones are muted, as said earlier. After each presentation, you may ask a question to the speaker. To do it, please write in the blue jeans chart situated in the right upper corner of your screen, asking for the floor. Please write your full name and the organization you represent. We'll give you the floor, but please be brief as we are limited in time. We will limit the number of questions to 3 for each speaker, at least in the first round. After we will have heard from all speakers, I'll open the debate. Here we will stick to 3 minutes for each speaker. You can also register via chat in advance. I hope everything is clear. I have the pleasure now to introduce our first speaker, to whom I would like to express our special thanks as he woke up at 3 a.m. US time to make it for our webinar. Mr. Ralph Chami is currently Assistant Director in the Institute for Capacity Development at the International Monetary Fund. From 2009 to 2014, he was also Division and Mission Chief for Low-Income and Fragile States in the Middle East and Central Asia Department of the IMF. Ralph is the recipient of the IMF Routine Operational Excellence Award for his field on fragile and, of course, low-income states. He has a PhD in economics from the Johns Hopkins University. His areas of expertise also include banking, remittances, and climate change. Mr. Chami will provide a global analysis of the impact of the COVID-19 crisis on remittances. Mr. Chami, the floor is yours.
Thank you, Mr. Munyama. Thank you for the nice introduction. And first of all, can everybody hear me?
Yes,
can everyone hear me? Okay. All right. So let me cut to the chase. Munyama presented a very nice introduction into this important subject. What I would like to focus on is what has happened to the remittance channel, which is viewed by many low-income, middle-income, and fragile states as a lifeline. For a very long time, we've always thought of remittances, remittance flows as a lifeline into these countries. However, this lifeline right now has become what I call the unintended channel of transmission of the COVID pandemic crisis, just like the trade channel, the financial channel, or the tourism channel. But before I get into the impact, I'd like to just to go back a little bit and tell you why do we think of remittances as a lifeline to these economies? So the next slide, please. Let's remind ourselves that remittances is the flip side of migration. And whether it be temporary or permanent, we, according to the ILO, we have about 165 million migrant workers. More than half of them are men. More than 70% are in high-income, rich countries. And they send money back, typically in a few dollars here and there per month. But when you add them up together, the numbers came, this is from my colleague at the World Bank, about $550 billion sent home in 2019. But let's remind ourselves, these are what we are able to measure through the official channels, which means there's a lot more through what we call in-kind or unofficial channels that get transmitted back home. So the number could be multiples of this. Next slide, please. So remittances, again, we have to remind ourselves, because when we talk about this crisis, we have a tendency, at least in the advanced economies, to focus on capital flows and portfolio flows. But for many of our countries, low-income, middle-income, fragile states, what the major source of flow are the remittances. They dwarf everything else. And since, in fact, 2015, remittances into these countries have dwarfed FDIs, portfolio flows, and official development aid. Next slide, please. Next slide. So they've been the least volatile of all the flows, and that's the chart on the right-hand side. These are my own calculations, basically showing you that remittances over time have been the least volatile, even when you compare them to official aid, certainly when you compare them to other private capital sorts. As a result, countries have come to rely on them, not only households in the recipient countries, but the governments in the recipient countries have come to rely on them. And the chart on the left is just to give you the top 10 countries. And this is what I call a conservative estimate. I use a very conservative estimation of the workers' remittances to show you that in Tajikistan, they're close to 40% of GDP. And the list goes on. And Munyama said, for about over 60 to 70 countries, remittances represent more than 5% of GDP. What does that mean for macroeconomists like me that have studied remittances for 22 years? Once remittances are over 3 or 4% of GDP, the dynamics of the economy is completely changed by the impact of these income flows, and not to be confused with capital flows. Next slide, please. All right, so just quickly, what do households use them for? Well, obviously, when you're sending money home, to help your family. So what happens? You're sending home as a result, they increase their consumption. It also buffers their consumption against shocks. They lose employment. Some natural disaster happens. It buffers the consumption of the household back home. They also use that money not only to buy food, but to purchase healthcare, to purchase education for the kids. Even if they want to start a new business, many in our countries cannot get credit from the banks, so they use the money that they receive from their loved ones abroad to alleviate the credit constraints that they may be facing. And some of them use them to increase their self-employment. They don't need to go into the typical market for employment, and they can create their own employment by starting new businesses. Also helps them to engage in informality. Next slide, please. So that's on the household level. So the The question is, well, are remittances safe from COVID? And I have been working, as I said, for a very long time on remittances. I studied remittances during the 2008 crisis, and I have never seen a chart like this. On the left-hand side, that comes directly from the World Bank. The right-hand table comes from our colleagues at the fund, our own calculation. What I'd like you to focus on is, it's not uncommon to see capital flows dropping, portfolio flows dropping, but it's highly uncommon to see all three types of flows dropping at the same time. Why? Because typically we think of shocks to a country goes through some kind of trouble and macroeconomic shock, and no matter what it is, and as a result, capital flows out of it or capital ceases to be coming in. But typically what you would see is remittances from the diaspora coming into that country. And that's why we always refer to remittances as counter-cyclical. But this is for the first time I see remittances and capital flows and portfolio flows all dropping at the same time. So this looks to me like the perfect storm. The estimate of the World Bank is the drop, as Mr. Munyama said, about 20% in terms of remittances. This is a minimum of $100 billion lost for 2020. Our estimates at the fund just gives you a more kind of granular estimate where the flows come from and how each economy is being hit in terms of estimates and the impact on the remittance outflows. And we're almost there. We're about 17, 18 in terms of drop, and that's projected, some would say, and it really differs from one area to the other, but on average, it's about 20%. Next. So then the question becomes, well, if you have this drop in this huge income into these countries, what is the impact on the households? Well, as I said before, they're using them to increase their consumption, to rise from poverty. Well, what are you going to see? A drop in consumption, an increase in poverty. Therefore, there's a reduced spending on public health, on education. The household are now, they lose their lifeline, they need to borrow. And suddenly now they did not need to be, in the formal labor market, or they could have engaged in self-employment. Now they need to seek employment. But remember, they're going to be seeking employment in countries where there are already problem of unemployment, high unemployment among the youth. Next slide, please. But the impact doesn't stop with the households. The next slide shows you that the impact has fiscal implications. The one before it, please. The one before. The one on fiscal. Yes. So this one here shows you the impact on the governments, because what has happened in many of the countries that receive remittances, governments have figured out that people are getting all this money, and they do not want to tax remittances directly, because if you were to do so, on many levels, this is a wrong policy, but let's just say they avoid doing that. So they try to tax them indirectly through consumption-based tax, such as value-added tax, sales tax, import tax. So what you're going to see, those countries that have relied on this consumption tax, they're going to see the base shrinking because people are not receiving the money, so not spending, so the consumption base is shrinking. As a result, they're going to see a drop in the tax revenue, which means now the government is now having to increase spending on public health, be it COVID, or be it simply because these people receiving their remittances cannot purchase healthcare anymore. They're going to be demanding the publicly provided healthcare and education, and the government now has to come up more money in order to do so. As Mr. Munyama said, the countries were using those hard dollars and euros and so forth to service their debt. That money is gone now, or under threat to disappear. As a result, there's going to be an increase in service, kind of insult to injury. When we say, well, countries in crisis should engage in counter-cyclical fiscal policy, the question is, where is that money going to come from? Because those remittances, the money that was coming in, that the governments were able to garner up from the consumption tax, other types of tax, is gone. As a result, even if countries want to engage in counter-cyclical fiscal policy, they need to borrow to do so. Please remember, this is over and above the trade channel and the financial channel and the tourism channel that are already under threat due to COVID. Next slide, please. The impact doesn't stop at the fiscal. It permeates every aspect of the economy. Remember, banks in countries where receive remittances have gotten used to this gravy train. This money that, as I showed you early on, is stable, is least volatile, and is cheap. Why is cheap? Because when you send money home to help your family, you are not sending money home to make money. So it's not like capital flow. It's not profit driven. It's altruism or care for your family. So banks in the recipient countries have gotten used to this free dollars coming in or foreign exchange coming in. Now what they're going to find out is that there's a drop in this cheap bank deposits. As a result, it's going to impair their ability to lend, whether they're lending to the private sector, which is hardly any. Most importantly, they were lending to the governments. They're going to find their ability to lend to the government impaired. So that's going to raise the cost of funding for borrowers, be it the banks, or be it the governments, or be it the individuals. And of course, all of that ends up when your assets are, or your deposits are shrinking, your assets are shrinking, is going to have a negative impact on your bank capital and on stability of the banking system. Next, please. In terms of monetary policy, let's remind ourselves, many of these recipient economies have fixed exchange rate regimes. I don't have the time to get into why they fix their exchange rate regime remittances, but many do. So if the exchange rate is fixed and you've lost so many needed dollars, there's tremendous pressure on the exchange rate to devalue for countries that have fixed exchange rate or to depreciate. However, something unique about this crisis is that typically you would think, well, okay, if the exchange rate is going to depreciate, yes, it's going to shrink the domestic absorption, but eventually the country's exports would be cheaper or tourism would be cheaper and people would come. None of this may happen in this case. Why? Because countries will not be able to export themselves out of this crisis, because even if your exports are cheaper, the purchasing power on the other side has actually been hit, because the COVID crisis is a global crisis. Everybody's been hit. So there's no one out there to purchase your cheap products, and no one is coming to visit you because the tourism dollars aren't there, because the tourists in the richer countries have been hit hard because they probably lost their jobs too. And plus there's a concern about the COVID infection. So countries will not be able, as in the past, to export necessarily their way out of this. So I wanted to build all this up for you before I go to the next slide, please. Labor market. So what happens is, this is what comes all together. The self-employed that we're using the remittance income to create new employment and to self-employ, they're going to lose all of that, and they're going to find themselves having to look for jobs in an already high unemployment situation, or find underemployment. All of this is going to result in severe pressures, social pressures on the safety nets and on the governments in those countries. Next slide, please. Now, this is the financial side and its social implications, but let's remember that many of our migrant brothers and sisters who are working hard in the rich countries, once they lose their jobs, many of them lose their ability to stay in the country. At first, they couldn't go anywhere because no one was traveling, but in many of those countries that we know of, well, the moment you get infected and you're not able to work, or you've lost your job because of the crisis, they are put on planes and sent back home. That's one bad thing in and of itself. But now let's remind ourselves that many of these migrant workers, their housing conditions are incredibly dire. As a result, once there's an infection among one, there's infection about many. So once the economy is hit, they lose their jobs, and they're all cooped up in one room, 20, 30 to a room, or 40 sometimes to a room, then the level of infection is high. So now they are put on a plane, they're ill, and they're going home. They're going home to a country that is already hard hit and trying to deal with the infection among the citizens within the borders. And now they're seeing their brothers and their sisters and their fathers and mothers coming home, and they've lost their jobs. They're probably infected and they need help. Or if they're not infected, they're looking for a job and already in a high unemployment situation. All of this, to me, says there's going to be a rise in social pressures within those countries. Next, please. This I call the boomerang effect. So what's going to happen is this situation will not be contained within the borders of a country that is hit, okay? Because people are going to find ways to be able to deal with the situation. If they can't find help at home, if they can't find jobs at home, there's potential for spillover beyond the borders of the recipient countries. And now we may see a new wave of more intense refugee problem. But let's remember that the narrative towards the refugees have changed dramatically from a few years ago. And now you're going to find yourself with more refugees trying to get to the rich countries where the narrative regarding accepting new refugees is less open. Next slide. So what must we do? Okay, what must we do? The discussion of what must we do, let's remind ourselves this is a global crisis, meaning it has hit everybody. Nobody's immune, as we've all seen. Okay? So what must the host countries do? Countries where the migrants, are sitting. But let's remind ourselves that the migrant workers are part of an input into the output. Okay? To say it in sort of economic terms, they are the part of the labor force. So if we want to restart our economies as we're trying to do, we need them to stay, because when you want to restart anything, you want the labor that remembers how things were done, and you don't want to let go of them. So this is from a purely econ side, aside from the moral aspect of it, which is whatever we are providing to our citizens in terms of employment protection, social protection, that same protection should be afforded to the migrants among us. They are part and parcel of our society. So the idea is employment protection, extend social protection. We should definitely do something about improving the accommodations. It's high time. We've known about it for a very long time. Not much has been done. It's high time to do something about the dire situation that migrant workers find themselves in these countries. And we've been talking about SDG 10 for as long as I can remember, reducing the cost of remittances below 3%. I haven't seen any dent in this. It's been hovering about 7%. I guess one of the speakers, Chris, will talk about this in more detail. But we need to do something about helping to reduce the cost of remittance. And now the technology exists, so there's much less excuse about saying how we're going to do this. It just takes a coalition of the willing to do something. Next, please.
Ralph, sorry to interrupt you. Could you please come to the conclusions, because we're going to run out of time, okay?
That's my last slide. And so what can the IFIs do? Well, the IFIs do what they do best, is to provide, of course, the funding, the emergency funding to help the countries to shore up the fiscal side, the balance of payment side, provide the technical help, and to help bring the coalition of the willing to actually do something about SDG 10, okay, reducing the cost of remittances and dealing with the situation of the housing of the migrant worker. Because we need those remittances to stay going to avoid all the problems that I've highlighted to you. Finally, the last slide, please. Let's remind ourselves, we are all in this together. No one will be able to get out of this on their own. Even if you get out on your own and the rest of the world has not, you won't be able to do anything. So we all need to realize that we are all connected together by a belt of humanity. We hold hands together and we push through together in order to get out of this crisis. Thank you very much. Thank you, Mr. Munyama.
Thank you very much, Mr. Chami, for the very interesting and deep overview of the problems and the presentation of the IMF approach to remittances. It was actually quite an interesting issue especially to learn about the impact on the households, on the remittances which they have on the households. Now we have some questions, and I would like to give the floor to my vice chair of the committee, of the subcommittee, Mr. Paolo Pisco, who has some questions to you, Ralph.
Please.
Mr. Paolo, the floor is yours.
Thank you very much, Mr. Chairman. Dear friends, first of all, I would like to congratulate the very nice presentation about this important subject by Mr. Ralph Shami. Because in fact, we didn't have the huge crisis we have by sending over
One moment, Paolo. One moment, please. Can the others mute the mics, please? Because echo coming up from some other participants. Thank you very much. You can continue, please.
Thank you. Affecting, of course, all the economies, because all countries have migrants, but there are countries, as we have seen, that have a huge dependence on the remittances. And we see that mainly the banks and the financial institutions and the governments recognizing the importance of remittances. But in the end, I'm not sure that both, because I guess the decision of doing something to make the remittances being safer, faster, and cheaper, in the end, I don't see much examples of good practices. So my question is it possible, can you give us some examples of good practices from governments or banks or financial institutions to make easy the process of sending and receiving the remittances? Because these good practices, if we are aware of them, probably they can help other countries, other governments, other financial institutions. For instance, the World Bank is sending some recommendations to the other banks around the world to do something. That's my question. Thank you.
Thank you very much. We don't have any more individuals on the list of people asking some questions, but I would like to add on to the question that Paolo put forward. I hope nobody will be against the idea that the moderator is asking a question, but I just wanted to know whether there is a positive element for households when there is a devaluation, or rather a depreciation of the currency of their home country, because they will definitely have more of the local currency in the case whereby there is some devaluation. What do you think, and what is your comment on that, Mr. Rao? So I'll give the floor to Mr. Chami to answer the two questions, and then please we could continue. Thank you.
Thank you, Mr. Pisco. Thank you, Mr. Munyama. Very, very good questions. Let me, in the interest of time, my colleague Chris Williams will actually be elaborating exactly on the question that you asked. Are there new technologies, new ways of reducing effectively today the cost of remittances from the average right now is 7%, okay, to below even 3%? And the answer is yes. Technology exists. What we need is the pressures from the central bank and the ministries of finance to make this happen. Because as you can imagine, you have monopolies that have existed for a very long time, and these we all know who they are. They are not going to give it up easily. They are not going to willingly say, yes, I will reduce the cost for you. There has to be coalition of the people that are being impacted by these remittances. Say, okay, we know you have to make money, but we can still, because reducing the cost of remittances would bring in additional billions of dollars, and I believe Chris has the number of how many additional billions of dollars needed right now could be released to the reduction in percentages of from 7% to 2%. Chris will get into much more detail, and I don't want to, get into his presentation on the technique, on what would be involved. But to tell you the following, some are hiding behind the issue of AML-CFT, okay, as the anti-money laundering, and to avoid, as a way to rather than increasing inclusion, it's basically saying either inclusion or you deal with AML-CFT. Whereas what you really want to do is bring the two together and say, no, dealing with AML-CFT enhances inclusion, and the banks should know their customers. And that's how you deal with the issue of the AML-CFT. Not that the banks say, well, I'm not going to do anything because of AML-CFT. It's not my problem, and therefore I am not going to be part of this process of reducing the cost of remittance. I'm not getting into the nitty-gritty detail because that would take me a bit more. But there are outfits out there, and I can give you the names. I can send you in fact, their presentations showing you exactly how they can reduce the cost of remittances from 7% to below even 3%, not tomorrow, not in a year's time. All it takes is basically the governments, the central banks, the ministries to agree within a country. You can do it within a country to reduce that cost of remittance. It can be done. Now, if I may go directly to Mr. Munyama's question, which is, yes, typically we think a depreciation of the currency, that means the dollar that you would receive from your relative abroad would actually have a bigger bang for the buck. But that is a very short-term effect that is offset by so many other things. One is, this is not a transient shock. This could be a permanent shock, not only to you in the recipient country, but to your relative abroad. It's your relative abroad that has lost their jobs. They're not able to send you the money. And whatever money they can send you, yes, of course it appreciates, but the total effect, they will not be able to send you on consistent basis or persistent basis. You, on the other hand, you're going to see inflation up the wazoo in your own country because your government now is losing a huge source of revenue. I mean, when we say the drop, according to the World Bank, the latest estimate is over 100 billion for 2020. That's 100 billion of income. Please remember, these are not capital flows. These are income flows. This is money into people's pockets. Okay, this is not profit repatriation. This is not some accounting game. This is dollars into people's pockets that they spend on imports, on non-traded goods, and all of this is into the coffers of the governments. And the banks have made so much money. I mean, I don't have to. In another, maybe if there's Q&A, I can tell you how banks have made money off of remittance. And now I know examples where the banks have money hand over fist over the drop in remittance. Thank you.
Thank you very much, Mr. Chami. That was a very interesting answers, and of course an interesting presentation. So we're going to move on. We're going to move on. According to the World Bank, the remittances to Sub-Saharan Africa are projected to fall by 23% in 2020. It represents $37 billion US. It will certainly have a very big impact on the poorest countries. Today, we have with us a very experienced expert on remittances to Africa, Executive Director of the African Institute of Remittances, Mr. Amadou Cissé. He is actually based in Kenya, and
Hello?
yes, please, we can hear you.
Okay, I didn't get. Did you finish your introduction?
Yes, the
Hello, can I go ahead?
The floor is yours, please.
Oh, thank you so much. Thank you, Mr. Munyama. Today, I would like to and also thank the subcommittee for having me to talk about this important topic, which is the impact of remittances. In general, the
we have a problem. We have a technical problem. We can't hear Mr. Cisse. Mr. Cisse, are you with us? Mr. Cisse, are you with us? Yes, Mr. Cisse, we can see you, but are you?
Should I proceed?
Yes, please, can you proceed? You can proceed.
Okay, thank you. So I was saying that it is a very relevant topic today for discussion, the importance of migrants' remittance in times of crisis. During this COVID-19 pandemic crisis, it is very normal that we ask ourselves what could be the impacts. Indeed, the pandemic has caused almost all countries to impose lockdown measures, restriction on economic activities, and the world is experiencing significant drop in revenue. Have lost their jobs. Among those workers, we have obviously migrants, and particularly migrants who are working in non-essential sectors, including and also in transport and hospitality sectors. For those migrants who have luckily managed to keep their jobs and their revenue, they feel, we think, pressurized by many relatives and friends back home who have themselves lost their jobs. And even for some times, they have been pressurized by those who are their friends who are in the host country. This crisis, it was said earlier, is not, it's a global crisis. And it has affected both the remittance senders and also the remittance recipients. But when we ask ourselves what are the impact of the remittance in the economic development, we have to look into the linkages between these two, because it appears and it is very clear that remittance, it is now considered, we are analyzing remittance as a financial phenomena, as money flows, though we have many other kind of remittances. While the development, it is rather a non-financial concept. But the linkages between these two is that development needs and requires some important financing. But are remittance made for that? I think that the remittance, the development issue, it is a very complex phenomenon, a very complex concept, and it goes beyond the concept of remittance, and it goes beyond the objective of remittance. Therefore, we cannot assume, and then we are not saying that the remittance objective is to look into or to address the development issues of the countries. However, it has impact. It can impact the development level of the countries. Next slide, please. How? First, if you look at the source of remittance, it was said earlier that if we considered remittance and migration as a coin, remittance should be the flip coin of the migration. The starting point could be and is the migration. And the linkages is that remittance should be understood, and it is defined as revenue for those who receive the remittance. It is household revenue. Remittance contribute to help the household who do not really have job or do not have enough revenue to cater for important expenditure. It was said earlier, it could be expenditure on health, education, and so and so and so. But this thing shows us the linkages between remittance, the generation of revenue as household revenues, and probably later on, when it is well utilized and when it is well leveraged, to contribute to the creation of jobs. But it's not remittance it's not only for remittance to ensure that we have enough jobs that are needs, so then to address the pressure that we have on migration and all these things. These are, next slide please. In times of crisis, this linkages between remittance and revenue is very loose. We cannot ensure that we will have the household will receive the remittance that they used to. And therefore, when we have a crisis like this one, where it is not an asymmetric crisis, but it is a crisis in both countries of origin and countries of destination, we might, and it is very obvious that remittance flows will decrease, and therefore revenue for the household will decrease, and therefore will have a lot of pressure on the social development in the countries. So many indicators will go down, social indicators will go down, and definitely will have impact in revenue generation and all these things. Next slide, please. What are those impacts? Let's look at the remittance, what it represents in Africa for now. In terms of figures, remittance, it is important, 80 billion more than 80 billion in 2019. In 2020, we'll look at it later on. It was said that we are expecting decrease in the figure, but this remittance, it is 12% of the total remittance that are sent or received across the world. But more importantly, it is almost 3.7% of the share of GDP in Africa. And it represents at least 5% of the household final consumption in Africa. And this remittance for Africans, migrants, it is generated by almost 35 million migrants, African migrants, across the continent. These are in a very synthesized and very summarized figures what remittance means in Africa. But let's look deeper in what really it means deeper, so that we can be able to assess the potential impact. Next, please. Remittance in Africa, it is for countries in where the ratio between remittance to GDP is more than 10%. We have 15% of countries, African countries, where we will see that the ratio between remittance and GDP is more than 10%. If you look at the ratio between remittance and exports, in 30% of the African countries, this ratio is more than 20%. If you look at the migration itself, how important is this phenomenon? In 30% of countries, 10% of the people, the migrant population represent more than 10% of the total population. And among themselves, if you look at the ratio of remittance to the household consumption, once again, which is very important, a very key indicator, more than 10% of the African countries, consumption, the ratio between remittance and consumption, final consumption of the household is more than 20%. What does it show, this one? That if remittance comes to reduce, then the consumption, the impact on consumption would be very important. And it affects directly the households in Africa. And remittance is that important that in countries where the ratio between remittance and household is more than 20%, in 60% of those countries, the stock of migrants compared to the economically active population is more than 25%. These are, in a nutshell, some indicators that show how important migration and remittance are in Africa. Yes, we have some discrepancies among the countries because there are some big countries like Nigeria and Egypt. For those two, they receive almost 50% of remittance to Africa, total remittance to Africa. But we have also some other countries like Morocco and Ghana, where we have high volume, and many countries, other countries, Senegal, Kenya, Tunisia, Algeria, Zimbabwe, and DRC, where we have high level of migration and high level of remittance flows. Remittance, this shows how remittance is important in the day-to-day lives of people in Africa. Now, what could be the first round effects of a drop of remittance in all these in Africa? Next slide, please. If we work on very simple hypothesis that migrants across the world, for African migrants that represent 36 million, rough hypothesis that we worked on brought us to around 5.4 million jobless African migrants if we had to register a drop of remittance to 15%. What does it mean? It means that back home, almost 27 million family members would be without revenue. It means that back home, the aggregate demand, these are first round effects. And these are just the effect of the drop of remittance, and we do isolate it. We do not include the other impact on other economic, activities and so. The drop to aggregate demand would be 1%, and the drop first round effect on the GDP would be 1% across Africa. If we had to take the second round effects and to take also the effect of the crisis in general, in all other sectors, definitely we'll see that the GDP for Africa for 2020 will decrease very, very importantly. What are the lessons now that we get from this crisis? Because if we have to look forward. Looking forward is that what can we do to protect our migrants in case where we have global crisis like this one? It could be from other source of shocks, but let's consider that. First of all, I think it is a call for Africans, countries, and also for all the partners.
Sorry for interrupting you. Can you just get to the conclusions, please?
This is the conclusion in the last slide. That's the lessons that we did here. That when remittance occurs, we should leverage remittance when it occurs. It's not in times of crisis that we should look at the impact and to look at the strategies. Second thing, it is important for both African countries and the host countries to build safety net strategies for migrants and their families, but also to design products that are for insurance of migrants, and also for countries to ensure that their plans for inclusion, for financial inclusion, take into account the migrants and their families. These are measures that we think should be put in place in African countries and also all other countries, such as that migrants would be able to face these type of crises and also to make sure that and to contribute to the resilience of the African economies. Thank you so much. Thank you for having me.
Thank you so much, Mr. Cisse, for the interesting presentation. At this point in time, we don't have any questions, but definitely the last part of the session, there might be some questions that will be directed to you. So we would like to thank you so much for being with us this afternoon, this morning. Yes. Now I would like to give the floor to Mr. Pedro de Vasconcelos. Yes, Vasconcelos. Good, very good. Thank you very much. Manager of the financing facility for remittances at the International Fund of Agricultural Development. Mr. De Vasconcelos actually joined IFAD in 2007 as program manager of the multi-donor financing facility for remittances, and is IFAD's senior technical specialist on remittances, migration, and inclusive finance. The $66 million facility under his leadership has tested and scaled innovative approaches on migration and development and economic development by maximizing the impact of remittances and, of course, migrant investment on development. Mr. De Vasconcelos is an internationally recognized expert in his field and, of course, contributes actively to national, regional, and global policy agendas such as the G7, G20, Global Forum on Migration and Development, and the IFAD's Global Forums on Remittances, Investment and Development, among others. He's also the lead author of the biannual IFAD flagship publication, Sending Money Home, and the originator and coordinator of IFAD's International Day of Family Remittances. Mr. De Vasconcelos' actually areas of expertise encompass financial inclusion, migration, and of course entrepreneurship, small and medium enterprises development, and finance. Mr. De Vasconcelos will actually present to us the work of the Remittances Committee, Task Force, and of course the importance of remittances to resilience and development. Mr. De Vasconcelos, the floor is yours.
Thank you, Mr. Chair, and thank you for this introduction. Can I just confirm that you see the screen?
We are seeing you at the moment, but
you do not see the screen? Mr. Chair, do you see the screen?
Not yet. We are seeing you. We are seeing you, but we are not seeing the screen.
I did put share screen.
We are seeing you, but we are not seeing the screen. There we are. Now we can see it. Thank you.
Okay. I'm going to put it in full. Maybe I'm just going to leave it like this because I was in full screen and it wasn't showing. So if it's okay, I will leave it like this, maybe. Or
you can leave it like this. It's okay with us. Thank you.
Okay. So thank you again, Mr. Chair, for this introduction. I think you said everything. I've been working on this issue now for 20 years at the International Fund for Agricultural Development for the last 13. IFAD being an IFI, and prior to that, the Inter-American Development Bank as an IFI as well. Identifying the mechanism of remittances as well and how these can support development. And I would like to, before we get into the it's really of COVID-19, I wanted to give you an
one moment.
At the moment,
can you please mute your mics? The rest of you, the participants, please, can you mute your mics because we cannot hear Mr. Diasporas properly.
So thank you, Mr. Chair. For this, I think to understand remittances, because there's been misconceptions for 20 years. So I wanted us to provide you what we believe being the theory of change of remittances. At the source of all that is the lack of income generating activities that push people to migrate. For the majority of them becoming migrant workers. These is when the phenomenon of remittances occur, many of them migrating for that sole purpose of being able to sustain their families back home. And with that money, the $200, basically the cycle might continue if these flows are not leveraged. And this is where we believe the theory of change in remittances and further down to migration, but also local economic development can happen. If these flows are leveraged in some way, you can break the cycle. And this can be done through savings mobilizations, asset building, income generating opportunities, and job creation. In other words, all these aspects that actually generated the lack of income in the first place. So this is something very important. I'm very glad from our previous colleagues that gave us also the overview of remittances, what they mean. I wanted to give you from a perspective of IFAD, what it boils down. We're looking at a mechanism that involves 1 billion people. There are 200 million people actually sending remittances back home. We have the official figures about remittances, with migrants. If you had also migrant workers, and you basically calculate, you're going to get to 200 million people sending on average to 800 million people back home. So it's 1 out of 10 people in the planet that are involved in this phenomenon. 100 on the sending side, 100 million women and 100 million men that basically go abroad to work. 75% of their income stays. Whatever they're making in Europe stays in Europe, and 10% of that is saved. Therefore, potential for savings, diaspora savings, we calculate this globally to be $500 billion in savings mobilized by the diaspora on a daily basis. And only 15% is what we call remittances, what they send back home. That on average represents 60% of the income of families that receive it. So for 800 million, 60% of that, these $200 on average. And the question is, what do they do with that? So 75%, it's been said before, it is for basic needs, daily needs, oftentimes called just consumption, which we regret because that gives a negative connotation. But it is true that in general, these remittances put food on they reduce poverty, they put food on the table, they pay for health and health of the families. But 20% of that invest in education. They have an effect on gender equality, and of course sanitation, business investment. And the theory behind this is, how can we maximize this, particularly this 25%? How can that be leveraged, and how can basically have more bang for the buck of our remittances? So over the years, IFAD has developed a theory of changes specifically, and based on promoting access to remittances, particularly in rural areas. We need to know that more than half of the flows go to rural areas today. And this is where the access to this mechanism and the services are the most difficult. So we're trying to create a more inclusive market that basically promote easier and cheaper.
We've lost.
This is where remittances have the biggest development impact by linking this with financial options. Many of the people that receive cash basically do not have access to financial products such as savings, credit, insurance, or even for that matter, pensions. And this is the opportunity to do that, to create those linkages between these remittances and those, meaning financial investment. We talk a lot about investment when we talk either of remittances, either from the diaspora savings. And these are mechanisms that are still looking for best practices to bring it to scale. We talk about diaspora bonds, that has a specific mechanism of pulling a lot of resource and putting it into a government dedicated program. There's also a mechanism that can pull these diaspora funds on a more granular basis, where the migrant can invest directly and see the impact of its funds through crowdfunding. And there's a whole spectrum of things, but these still have to demonstrate that they can be there's an uptake by the market and viable. The other is the productive use of remittances, promoting entrepreneurship and linking financial and non-financial services to remittances. These are all the theory of change that IFAD has been applying and many other stakeholders. And as we've seen, of course, is that COVID has made all these approaches even more difficult. As a snapshot, so for the type of activities that we're preaching for, this is a portfolio of IFAD on project of remittances. You said it, the size of the program, but it's just to say that all this theory of change has been applied to every single region of the world that relies heavily on remittances. And aside from some differences, we see that there is a lot of common denominator factors around that. 3 examples of what I mentioned to visualize. For instance, in Malaysia and Pakistan, we're linking remittances with mobile wallet services. So migrants can transition from the cash to cash to a more digitalized solution. And this is working not only to bring them into the digital financial space, but also to bring their families on the other side, of course, at a reduced cost as well, and bringing a whole array of other products. This is, for instance, what we're also trying to promote, and an example in Malaysia and Pakistan. In Uganda, where I mentioned about access and bringing other factors or other actors like the postal network, particularly in rural areas, that's what we also have been doing, bringing a lot of results, allowing basically the postal network to reinvent themselves and really add value to the extensive network they have. In the UAE, we're promoting linkages of services of insurance. Migrants that actually depend on the families that depend on these flows, but unfortunately at sometimes in times of crisis like we're going through, cannot send them anymore in some instances. Wouldn't it be great if there was an insurance? This is exactly what we've done, and allow the families to continue to receive remittances and for the crisis not to be so disruptive on their opportunities. So quickly on the COVID-19, many issues have been seen. As we know, the drop on remittances has been forecast at the time of the crisis. We still need to see the aggregated drop for 2020. We will know early next year. Some corridors have actually experienced an increase. So demonstrating yet still that there is this resilience from the market community. There's true that many lost their jobs, therefore not being able to send remittances in the first months or the month of March, April, and maybe subsequent, we saw a drop in some corridors. In others, actually, we saw, again, an increase. This is also because migrants are tipping on their savings for those that lost their job. There's also newcomers, new diasporas that were not sending before that are sending. And of course, then there's on the balance is the depreciation of the local currencies that have been transitioning. But overall, there is an urgent measure, an emergency. And we believe that if not addressed properly, this can just be risking a major risk for millions of people to achieve their own SDGs. The first of it, I think, as we enter the autumn and winter months, is to make sure that we address the main issues. Many of these remittances services were not deemed essential for the first month, not allowing people basically to send. And I wanted to say about this is addressing COVID. It is not an issue of addressing the $500 billion almost on remittances. It's a $200 issue. And it's by understanding the lifeline of this $200 that we can start supporting the address. On this presentation, what I really wanted to quickly say is that there's been a call from the UN Secretary General in regards to remittances. We represent a lifeline in the developing world, and IFAD responded with its partners with the creation of the Remittances Community Task Force. Almost 40 organizations are involved from all sectors, public, private, and civil society, to identify and address the lack of information that existed, to understand what are the issues that the market is facing and remittance families. And in this regard, we created a blueprint for action. It's a product of 40 members of this task force and what they have witnessed. A report was previously released. It will be fully released in a week. But this is an exercise that allows to understand how COVID is impacting and what can be done from the perspective of remittance families, the service providers, and the digitalization of flows, but also in the enabling environment. It is important to say that there's not a one solution fits all. There is, particularly when we're talking, for instance, about costs. We're always trying to find the magic solution. There's none. There's not one magic solution. There's not one app. There's not one law. There's not just one change in behavior in customers that will solve that. It's an aggregation of all these phenomena. And this is for the reason why we've been talking about cost reduction for 20 years, and it's still not really understanding what could be the quick solution. And that's, I think, what we looked at that. It's all the aggregators that contribute to that. So there was a set of, I'm not going to go through the entire list, but maybe highlight for you to understand a little bit on the issues that we think need to be, we as a group think need to be addressed. The immediate measures is remittances are essential services. This is an easy one. Few countries in Europe have done that. The UK has done that, New Zealand, but few services recognize remittances as essential service during lockdown. And we might be looking into another one. So this would be the time to take action. There is support to the remittances service provider that needs to be done.
Sorry to interrupt you. There's somebody who has his mic on. Could you please mute your mic because we cannot hear our speaker clearly? Could you please mute your mic? Thank you.
Thank you, Mr. Chair. And as I was saying, there's support for the remittance service provider that is needed. There's some tweaks and tricks there that need to be done, like, for instance, revision of the transaction balance limit. This can make the life of remittance service providers a little bit easier. There's, of course, all the strength as what we are doing today towards bringing the cost down. But there's also issues on waiving the tax of remittance transactions that in time of crisis and beyond would be necessary. Public and private sector needs to definitely come together to understand better all these issues. There's continuity plans that need to be adopted with the reality of remittances as well. And of course, digital remittance products. There's been a surge in digitalization of remittances out of need because this, as we mentioned, issue number one had to, basically migrants needed to find a way, and the digital world or space basically allowed migrants to be able to send. So there's been a surge and we need to capitalize on this. There's of course the fact that we need to promote resilience. This is what at IFAD we're very keen, I think, with many other development partners. Remittances is an insurance for millions of families. We need to strengthen that resilience and therefore link this with other products like savings, loan, and insurance. Financial support to recipients' families is crucial. Many of those have not received remittances. As at IFAD, investing in rural people, we see this as priority number one. It's the silent help that we see in rural areas. As I say, more than half of the flow go to rural areas. Cutting that flow has been, in many cases, catastrophic, and we need to try to support these particular families since they have an impact in the communities where they live. Of course, we also need to look at our remittance service providers as beyond cash. They're really supporting in other urgent services, particularly in rural areas, and this is one of the points. The third and last part of the support is more related to the enabling environment, and this has been structured around the well-known for regulators, the general principles on remittances. And these are a specific set of recommendations of these general principles that can help regulators, central banks on the receiving end, but also on the sending side to mitigate the impact of COVID-19 on the cost of remittances. As you can see, promotion of digital remittances services, address, of course, what was already mentioned before in terms of AML, CFT, relook at that and try to make it more adapted to the reality of remittances service providers, and therefore have a more fair, transparent, and risk-based approach to this. And finally, also addressing the issue, as we mentioned, of de-risking. Again, that definitely needs a new name because it implies that banks don't want to take the risk, which indeed they have actually not measured. And this is something that yet still in crisis, we definitely see. I'll finish with my last slide in saying for IFAD, what are the actions that we've taken since then? As a secretary of the RCTF, we brought all this product of many forward. We made a big a soft launch, let's say, of the preliminary results on the occasion of the International Day of Family Remittances, which we're a custodian as part of the Global Forum on Remittances, Investment and Development. But we also created the National Remittances Task Force in the Gambia, Ghana, and Senegal to bring these global realities to the national level and try to see if it fits. These are being very productive in terms of learning how to address this at country level. The financing for development that you all have heard of, the leaders having met early last week, has also taken the recommendations of the Remittances Community Task Force and its measures, and also the G20 have been introduced with this. What we are effectively doing besides engagement is on data. COVID-19 has showcased a drastic need for reliable data to understand. IFAD has launched RemitScope. It is a market. It is a portal addressing remittances market data in Africa, in particular, to sustain the information that the private sector needs to actually change and improve in the ecosystem. On the type of operations, we're working with public and private. We're launching technical assistance grants to support this innovation that is needed. One step forward in trying to bring or increase the development impact of remittances, bring costs and bring digitalization. So supporting new innovations in business models and technologies that allow to do that. And of course, we're supporting the central banks and regulators to address and understand better the issues around COVID. And we're not doing this alone. We're doing this with our colleagues of the World Bank and others. Thank you so much for this. I'm sorry if I went too fast, but I hope this presentation also will remain available to be seen more in detail. Thank you so much.
Thank you so much, Mr. De Vasconcelos, and your presentation actually reaffirmed how essential, we could say, remittances are for some countries and how important it is to coordinate our efforts actually in order to improve the access to remittances services. We need to encourage our governments actually to develop regulatory environments enabling the reduction of money transfer down to zero. Now we have one question that is going to come from Paolo Pisco. Please, Mr. Pisco, the floor is yours.
Thank you, Mr. Chair, and I'd like to thank the very expressive presentation of my fellow citizen, Pedro Vasconcelos. I guess you are from Portugal. I guess it's very, very much expressive. And I have mainly two questions, because I think there is a very important issue which is related with leverage of remittances, because most of the times, and Portugal is one of the countries that uses a lot of the remittances for the Portuguese. This year, we had, I guess, about 3.7 billion euros of remittances from the Portuguese living abroad, which is a very expressive number. But the question is, that although we know the importance of remittances for the economy, for the banks, and for the social cohesion, and etc., this question of leveraging the remittances is also that does not happen. It doesn't happen. So my question is, what can banks, financial institutions, and governments do to use this money in a more expressive way in order to do something that you mentioned also, which is to break the cycle of migration? Something very important. And it's a way also of putting in value the importance of... and you also said that we are speaking about cost reduction of remittance for 20 years, and this is a long time. It means there is a lot of resistance. Can you speak also a little bit about this? And the other thing that I'd like to ask you is, I'd like to know if there is an average cost for the remittances all over the world, because course, if the costs of remittance are very high, it means that a lot of money stays on the financial system and in the banks instead of sharing this social dimension linked to the remittances. Thank you very much, and I look for your explanations about these questions, and good work. Thank you.
Thank you very much. Yes, please, Mr. De Vasconcelos, the floor is yours.
Okay, I will try to briefly. I mean, this will be a long discussion, but let me give you maybe the headlines. And again, it's a pleasure. Yes, indeed, I'm Portuguese. Remittances. It's a simple yet complicated topic, and this is the reason why I think you're asking the right questions. You mentioned about costs. As I say, the solution for cost, there's no silver bullet. This is as simple as I can put it. But it's definitely a golden opportunity. There's no silver bullet because it's not a question of just an app that does it for free. It is not just a question of a law. It's a combination of all that. You need a stronger widening and deepening the remittances market. Why? More competition will bring the cost down. In order to get more competition, it is not just money transfer companies. You need to have other type of institutions coming in, like banks. You mentioned the examples of the silent successes of Spain, Portugal, Italy. These are institutions that since the 80s, end of the 80s, understood that they could benefit from the local economic impact that remittances were providing. Portuguese banks were opening branches abroad in the US. They were actually sending remittances at cost zero in 1993 from the citizens that were in US Newark. In some cases, those that were in Africa. Why? Because they saw this as clients for financial services, not just for remittances. And this is the cultural change that needs to be. Instead of that, we are in a de-risking mechanism, where financial institutions don't see migrants and their funds as viable. And that's the cultural change that needs to change at CEO level. This is also what government needs to promote. Portugal has sent a lot of tax incentives for sending remittances, cost zero, and they were saying if you invest home, no taxes. All these silent examples that exist in Portugal, Italy, and Spain, just to make the Latin European countries, are still there for the grabs, unfortunately, have not been applied elsewhere. And it's a cultural change that needs to be done. There's not a law that will force financial institutions to understand that. They need to be, there's information, there's studies that can help them that. But this is why the rhetoric needs to continue. And I was mentioning about changing the word de-risking, absolutely. So these are the issues. Again, maybe to finalize costs, again, if you take everything into account, you take a diversity in the remittances market, new actors bringing that are also resistant to change. You can bring, for instance, cryptocurrency into this place. You have been seeing right now, resistance from many financial actors. This could be part of the solution, but it is not the entire solution. But financial inclusion of both senders and recipients is what we've seen and what history has showed us being an opportunity here, not only to bring the cost down, but to maximize the development impact that these flows have. And if this is successful, well, migration becomes actually more a choice rather than a necessity, as it has been. In Portugal, Spain, Italy, that's the reality today. Those migrants, the wave of migration that was pushed, actually allow these economies to stand stronger and future generations.
Thank you very much, Mr. De Vasconcelos. Sorry, let me interrupt you there. Thank you so much. All right. Okay, you might have some time to add on in the last part of our meeting. Now I would like to move on, and I would like to welcome Christopher Williams, Mr. Christopher Williams, the chairman of the non-profit organization RTPay, which apparently developed a solution on how to cut remittance costs to below the SDG target of 3% and potentially down to zero. Mr. Williams had a lengthy career in the foreign exchange management, including setting up the Bankers Network, the first web-based information and trading facility. He has been a member of the London Stock Exchange, London International Financial Futures Exchange, and the New York Futures Exchange, specializing in currency and treasury futures and options, advising international investment groups. His work we could say his work involves being an active member of the World Bank Remittance Working Group, along with additional ongoing interaction with various divisions of the International Monetary Fund and, of course, the United Nations. Chris Williams is also an active friend of the Parliamentary Network on Diaspora Policies, and we are happy to listen to him today. Please, Chris, the floor is yours.
Hello. Hi. Can you hear me okay?
Yes, we can hear you clearly. We can hear you.
Okay, good. Fine. Thank you very much. Yes, I'm Chris Williams, and just a little background on RTPay. We're a small non-profit consulting group, which particularly specializes in the way in which foreign exchange costs can be reduced. I think I've lost this screen, apparently. And the way in which we do that is part of what we've been looking at for a long time, in the way that transactions are organized. Okay, let's go to the next slide, please. Thank you. I'm not going to spend too long because obviously by definition what we talk about is rather complicated in many terms, and there is always an acronym overload in these things, which I will try to avoid, but I just, at this level, I wanted to just touch on one of them, the second one down, the SDR, which many will be familiar with, but special drawing rights. It's a blended currency rate published daily by the IMF, and it involves the 5 largest trading currencies in the world: US dollar, Chinese yuan, euros, Japanese yen, and British pounds. I say that from the background because although I'm not going to be able to go into too much detail about the way in which we propose should be used to reduce costs, it is a fundamental part of it that's necessary. So go to the next slide, please. Can I get the next slide? Thank you. Okay, we're going a bit. There we are. I think we've. There we got it. Okay, great. If I'm going to only just direct to a couple of points here. Ralph did a great job expressing all the problems that we have with the coronavirus and the impact it's had. I'm just going to go to the highlighted one about the Oxfam quote that up to 12,000 daily deaths this year could be occurring by the end of the year from starvation due to COVID-related recession. So all the other numbers that we get involved into, this one is just beyond belief in terms of the impact of the failure of families to be able to send money back. So that's 4 million deaths a year under that basis, which is out of all proportion with everything else that we're having to deal with the coronavirus. So we have 1 million people this year that's died from the pandemic, and we'd have 4 million if these numbers were anywhere close to being correct. So as one other number on this, you'll see our Project Zero, which we fully understand we're not going to get to probably ever, frankly, but it's our target, would add $100 billion to the value of remittances and donations if we were able to get somewhere close to, well, that's the target. If we can get to half of it, we'll be very happy. So next slide, please. one of the fundamental elements about remittances is that they are cross-border transactions. But the CPMI, which are a part of the Bank for International Settlements, which is a central bank, if you like, that cross-border payments are by definition more complex than purely domestic ones. They involve more, and in some cases, multiple players, time zones, jurisdictions, and regulations. That is clearly a problem for remittances, which are small transactions, typically around $100 to $200. And if they're being treated in the same way as other major cross-border payments are concerned, it's a very difficult way in which to get the cost down. I'm getting some feedback. Hello?
Can I interrupt, please? Somebody's switched on his mic or her mic. Please switch it. Can you please mute it so that we can hear Mr. Williams well? Thank you.
Okay, thank you. Just to put it in perspective, we have roughly 100 countries that send remittances and 100 countries that receive them. Obviously not the same. And if, as a rough estimate, that we have 25 remitting agents, now whether that's banks or money transfer operations, etc. That's not the branches, that's the actual operating groups in any one sending country, and say a similar number in the recipient country. If you take those numbers, that means you have 6.25 million potential routes per day of transaction flows in remittances. So it's not a surprise that you end up with high costs being allocated if you've got to deal with enormous amounts of transactions and many in sort of slightly minor currencies that are not active during the day anyway. So it's quite understandable why, as Peter was saying, there's like a 20-year experience trying to get costs down. Banks will say, look at what we have to do. And it becomes a sort of factor of saying, how can we possibly get costs down if we're having to handle all of this? So we take a different view, and it is based upon new technology, and it's also based upon a methodology which we're proposing. It's not going to. We can't do it on our own. It's not a question of anybody just taking an app and doing it. It's a question of whether or not the banks and governments, particularly in the recipient countries, decide they want to do something to take remittances out of the regular cross-border payments environment and recognize how important they are for their countries. That's how we're going to do something if we can. So in our solution, we don't use cross-border payments. Every transaction is domestic, and I'll explain that in a minute. As a domestic transaction, they're basically free transfers. If you're making payments internally, it doesn't cost anything in most countries. We have no foreign exchange costs, and we have no delays on payment. Again, I'm going to deal with those. And so we end up with, instead of 6.25 million transfers over different routes during the day, we have just 100 international transfers per day. Quite a difference, obviously, and therefore you can see how, if we are able to achieve anything like this, that we would have a major difference in the cost factors for those involved. Next slide, please. The basis that we look at is a central clearing in the domestic currency from, and I'll use an example, say a country like Norway, they send out to a lot of different countries, and under the basis that we're proposing, whichever currency that they are sending to is, we group all of the Norwegian krona transactions in together and gather them into a domestic clearing position of that currency. And we will end up with one amount of Norwegian krona being transferred into an international clearing center for all transactions, no matter where they go for the day. And we do that by use of this SDR as the transaction base from. So the calculation which is used in order to make our transaction is from Norwegian kroner into the SDR, which becomes the amount of the transfer. Now, obviously, we need to know more than that, and I'm going to come into that on the next slide, please. Breaking this down into 3 phases is the position in which we look at every remittance. It's not one transaction, it's 3. So the sending side, 1 currency transaction per day from the sending country. Now you do need to know, or the remitter has to know, how much it's going to be achieved in the settlement to the currency. So say that person in Norway is sending money to Kenya, he needs to know first off what the rate is for Norway to Kenyan shillings. We have that rate established because apart from there is a quoted rate by the IMF for a number of Norwegian kroner to SDR during the day, and it's a rate that's good for the day. There's also another rate for SDR to Kenyan shillings. Now, obviously, if we take those 2 together, we create a rate, therefore, which is what would be used to show to the sender what is the rate for Norwegian kroner to Kenyan shillings, which gives us that base. But as I say, it doesn't matter whether they're going to Kenya or Uganda or Zimbabwe. They are all the same as far as the sending function goes, because we're only going to look at the Norwegian kroner into the central clearing. The clearing structure matches off all the daily funds. That means that money which is intended for Kenya coming from up to 100 different countries are all going to be brought into one total amount, which would be available for the operators in Kenya to release to the recipients. And the settlement side is the third piece, which if they are comfortable about the money coming in and how we do that, and it achieves the regulatory controls, which is an important part of the structure which we propose, then they can make a real-time payout. They're not waiting for money to be actually sent into Kenya. They're doing it from the basis that that money is, they are able to have that released, and there are separate issues as to how that's done. But and one of the primary areas which we greatly encourage is if, for instance, the central bank of the recipient country is looking at doing this as part of a project to improve the remittances, if they become an element in the management of this, which may or may not be part of central bank digital currency, the CBDC, which many countries are looking at as being a way to do this. I'm going to pass on quickly to the next slide, please. So on the sending side, the remitter has seen the price of the SDR, and he will have seen what the guaranteed amount is in the recipient's fiat currency. So that because we've created that cross-reference between the 2 SDR rates. It's not. There will be some reverse transactions, which would be based upon money going into, in our example, Norway as remittances, but clearly there are not so many of that nature. And there's also a function, as we're going to see in a moment, that we do see a demand for foreign currencies based upon corporate demand from the countries that are receiving the remittances. So there will be some netting environment involved. Okay, next slide, please. The central clearing is the basis of all the transactions. I'm not going to have time to go into much of this, but this is where the netting takes place. And there are, as what we would like, and I do wish to stress this, and I think Mr. Devas was talking about the fact, is there a single app that does everything, etc. And we don't say there is. What we do say there is a structure that if the elements involved, which would include the central banks, includes the commercial banks, includes the money transfer operators, if they decide they want to work together and use the fact that we can cut the costs for them and they still do their parts, then we have the opportunity to do something which is really different and make a major difference to this. But we're not saying that there's any enforcement or that it's not open to all to be able to do this. But in this, there's one area which we talk about South-South transactions. This is a major cost area in many parts. In Sub-Saharan Africa in particular, there's a lot of very high expenses. We want to work with the various organizations that may want to do this as a sub-clearing function within that. And it's too difficult to explain in the time, but it's part of the overall structure is to work with organizations in order to make this occur. Next slide, please. The settlement side is an area twofold, really. The money that is going to be given out to the recipients has to be matched off. At the moment, we've got it, as you'll recall, in SDRs sitting at the central clearing point, international clearing point. It is always the case that there is more demand for hard currency from any of the current countries that are receiving money, but for their government and for their corporate structures, that they need more hard currency than they are receiving from remittances and aid. We therefore have to try to make it that we optimize the structure by allowing them to get the offset of these transactions, and that will often be at a better price. So there is a bidding format, which again, I know I'm short of time, so I'm going to rush through, but there is a way in which the corporate functions within the country, at Kenya in the example, that they will be bid for hard currency funds, and their price for bidding it will be at a higher rate. And it doesn't matter which one. It doesn't have to be the rate that's anything's applied. It doesn't have to be an SDR rate, although it probably will be. That way may come at a higher rate than the guaranteed rate for the recipient. And what we've built in is therefore a calculation of what that is, and we propose or we suggest that that be given as a bonus for each recipient. So there was a question earlier, I think from Killion, about whether or not what happens if you're having devaluations or looking at devaluation effects in countries. We want it to stay that there is the benefits of the recipient are going to be he gets the best possible rate. Now, if we're offsetting this against the hard currency demands, there might be a bonus of 5% or 10% or 20%, depending upon the way in which the currency is moving. And that can be given to the recipient. So he has every encouragement to use this structure. Doesn't matter which countries, which entity is doing it, any bank, any money transfer operator, etc. Next slide, please. Whereas we've said that we want to try to get the rate down to zero, and just to recap, because we've taken out the cost of it being the cross-border transactions and all the functions that go with that, we've made the transactions so far into domestic, and we're doing the offset of the hard currency, so there's no final level involved, and that hard currency usage will be at a higher price than the amount which is being used to pay the recipient. All of those things make some sort of sense, but we've got to go back to the fact that we take nothing. The regulatory group that take nothing, but there is still a profit motive which is necessary for the money transfer operators and for the banks, etc. We've taken out the costs, but they'll still want their money for actually the bits which are often the hardest bits, which are putting the money out into the final payment and taking the money in. We're set therefore saying if we can get it not to zero, but get it down to below the 3% SDG target, then we will have made at least a good start. So we would aim to do that as being the first level. And there is one entity which we've already agreed to try to assist that has a network or is building a network of regulated entities in the countries, and they have put a maximum of 2.5% cost as the total guarantee they provide. Next slide, please. I mention that because it doesn't. We don't care which entities do this, but I mention this because this is a live offer, if you like, from this group TransferLink, who are a for-profit entity, and guarantee a 2.5% if they end up with a sufficient membership of their organisations, and that's a shared function. I'll mention just on the left-hand side, Finclusive, which is our partner on the regulatory side. CAAS is compliance as a service. It's a function which they offer that provides the regulatory structure for both the sending and the recipient side. They come from an extremely high quality group, and they are happy to work on the same basis. So final slide, please. This is a unique concept. Why is it unique? I'm not quite sure. Foreign exchange mystifies a lot of people. I've been at it for an incredibly long time, and I know that it's something which even highly sophisticated people find it difficult to understand the actual base. We are at a stage where this is a unique format. It's probably unique that anybody would want to put the various levels that Inclusive and we do for free into it. It's genuine. That's what we do. I've been trying to do this for 20 years now, since I gave up my for-profit businesses to work on things which I originally was working on, things with the European Union, etc. But it's only going to be successful if we have the support. The support we aimed for, the biggest support, is if we can get the central banks of the recipient countries to look at this. They're the ones that have the greatest ability to recognize the importance of remittances for them. And I haven't touched on the donation side, but we do have a function there which can be quite exciting to be able to help those people that are trying to do the best for people in this extremely difficult time. So I'm going to stop there, and hopefully we will have people that have questions overall and see the presentation. I will put a message on the board with my email address. We would like to be able to send you the full operation if you have people that are interested in the detail of this, but I'll stop there. Thank you very much.
Thank you very much, Mr. Williams, for the very interesting presentation that you have put forward. It was very exciting to see that you're using the special drawing rights as a means, as a vehicle in exchanging a currency into the currency of the recipient, which is quite an exciting word, as we know very well that the SDR is the most stable, we could say, money on the market, since it is a basket of 5 currencies, the main currencies that you have also presented. So thank you very much for that presentation. We have Mr. Pisco with a question. Yes, Ms. Lolo, the floor is yours.
Thank you very much, Chair. Once again, I'm really very pleased with all the presentations that we are having this morning, because they really are expressive, and I would like very much that would be a leverage to a kind of awareness from central banks, from this financial institutions and governments, to do what is needed to do to put in value the remittances. One of the things that I think that probably it would be very important to us to have a clear idea about which is the state of the art in this moment, was to have all the good practices existing in countries for the remittances. Is it possible to have these all these good practices in order as to make understand better which is the current situation. That is one thing. The other thing is, could you tell us which are the alternative payments that are being used now for to send remittances? And as far as I understood, in general, the costs of sending remittances is about 7%, which is huge, which is a lot. The banks keep a lot of money that could be very helpful in the countries that really need it. And the other question that I would like to ask is, which is the role that the variations in exchange rate of currencies can play in the remittances? Well, these are the questions that I'd like to put forward. And thank you very much for mainly your suggestions, because they are very important, but they really need to, the Council of Europe should have all these recommendations and to governments and central banks. Thank you very much once again.
Thank you, Mr. Pisco, for the questions. Now let's have Mr. Williams to answer the question that Pedro put forward. Thank you. Paulo, sorry.
Yes, thank you. I would say that the structure that we see as being the most likely areas of development are where the digital transactions are taking over from the everything else. I mean, the costs involved have been sort of the opportunity of digital transactions has become a lot more obvious and apparent, and I believe that what we're seeing is the price base is available to be brought down in that manner. I think the question of the valuation of the currencies that raises a sort of an interesting element. It's a key factor that you've got to have something which encourages people to be holding only their own fiat currency in the recipient country. The threat, I would call it, but the potential of Libra, the Facebook product, which was to create another currency that would act sort of like we talk about the SDR, but different, because the SDR from our structure is purely as a way of getting money from one country to another. There isn't any, there's no holding of funds in SDR. But those people that are in danger of being lost to the home currency, to the control of the central bank of their country, that would go and buy a Libra or whatever it's called now product, which takes money away from the control of their government. It takes the money out of their GDP function. Now, they are a loss to the government. What our structure does is we make sure that all of the functions would be to bring money solely payable out in the domestic currency, and whether or not there is pressure on that rate. So you might have a country, well, some like, for instance, Sudan at the moment. They're having a massive increase in inflation. Now, most people, so how you can keep up with the rate as to what is applicable for the value in that country, and some others which are not as dramatic as that rate, but there's been some considerable loss of value of a variety of countries because of this recession caused by the pandemic. That what, as I said briefly, was about the idea of offsetting the hard currency requirements and how to do that, and providing that as a bonus to the people that are getting the remittance recipients. How you do that, you're making up for any weakness of their currency by giving them the higher rate, so they'll get more of them automatically through the bonus. I'm not sure if I'm explaining it particularly well, but it's an important factor of trying to help the recipient governments and central banks be able to make sure that they are competitive in the rate. And there is a side element to this. As Amadou was talking earlier, that there's quite a lot of money that doesn't come through the official market, that goes through other markets. Now, some of it is purely criminal, but there is the rest of it which is there because it's not easy to get the funds to it, and because they see that there's higher value in the black market than in the official market. Now, I'm not saying we don't want, but the only people that we can use our proposal are people that are regulated entities. We're not into sort of helping the black market, but what we are saying is that by having the rates available to be improved during the transaction is a way of making sure it's competitive in price. And I think, although it's hard, it's impossible to prove it, but you would get more money coming from the informal market into the formal if you are paying the highest rate for the currency. So hopefully that gives an answer to your question.
Thank you very much for your answer and for the question as well from Pedro. We have one more question, which is actually directed to all the participants, but please limit your answers to only 3 minutes. And this question is from Madam Susan Moncasa Bitumba. Madam Moncasa, you have the floor, please. I want to also to let you know that Susan Moncasa is the winner of our Diaspora Prize, which was presented to her when we were in Georgia last year. Madam Moncasa, the floor is yours. Yes, Susan, the floor is yours. Can you come in, please? Madam Moncasa, are you there with us? Are you with us? No, she's not with us, but then I'll ask the question on her behalf. The question says, what is the position of the African countries regarding the contribution of the migrants in the development of the countries of our region? This is a question that will actually go to all the members of the panel. I would like you to limit your answers to 3 minutes. Yes, please. Who will take the floor first?
Maybe Amadou?
Yes, sure. Hello? Can I have the floor? Mr. Munyama?
Mr. Sise, you have the floor, please.
Thank you. So I think the position of the African countries regarding the contribution of the migrants to the development of the African countries is very clear. It was made very clearly in different occasions that beyond the migrants, the African countries considered all the Africans, all people of African descent, that they should contribute to the development of the country. And this is the reason why, beyond the concept of migrants, even we talk about diaspora. And the diaspora was made the sixth region of the African Union. And then in all the strategies, the African Union and the African countries through the African Union, they have agreed to take into account the contribution of the diaspora in their development programs. In all African countries, they are encouraged to have this component on the contribution of diaspora to the development of the countries. This is not only limited to financial contribution. It is also extended to all kind of contribution. It could